Hey everyone, and welcome back to Everything Tesla Stock. Today, experts are currently considering Tesla shares to be a strong buy, despite its previous losses. By sales, Tesla is one of the world's biggest manufacturers of EVs. The company's ability to generate profits has recently increased as profit margins have continued to rise. Tesla's balance sheet is looking strong. A limited amount of long-term debt and ample cash reserves cover these liabilities. Nevertheless, several factors, most notably Elon Musk's controversial $44 billion Twitter deal, have caused fluctuations in the valuation of Tesla shares. However, other experts claim that the recent stock sell-off has obscured a number of significant benefits to the Tesla story and the potential prospects associated with it, including a compelling entry opportunity. The stock price has recently been impacted by a general tech sell-off, escalating recessionary fears, production issues with COVID-19 at its Shanghai factory, Musk's stock sales to finance his planned acquisition of Twitter, and worries about revenue and EPS growth due to escalating competition and rising costs, according to experts, including Leon Kogoan, a self-proclaimed Elon Musk fanboy who has become the third largest Tesla investor. In response, he asserts that Tesla has been unfortunately punished by the market, contending that these elements are obscuring several significant advantages, like exceptional operational and earnings execution, future production growth, and the recently launched factories in Austin and Berlin, as well as dramatic balance sheet developments and a remarkable pipeline of future products. After all, the automaker's stock is still down more than 30% for the year. Additionally, this occurs at a time when the company's automobile deliveries are expanding quickly, and demand vastly outpaces supply. The pricing is also more appealing because the stock's price-to-earnings ratio has dropped during the last year. This is why Leo believes now is a good time to buy Tesla. Moreover, a 38.5% YTD sell-off in the shares has produced an appealing entry opportunity, and experts see Tesla as a firm win with the potential for industry disruption, market share increases, and long-term stock performance similar to companies like Apple and Amazon in the 2010s. An investment with long-term return potential similar to digital disruptors like Apple and Amazon a few years ago, experts believe that the stock sell-off has produced a highly appealing entry point in one of the market's most intriguing growth stories. Due to this, experts think that Tesla is a good investment right now. But let's take a look at the growth stock, its valuation, and the core business valuation to see whether shares are compelling at the moment. Rising sales and earnings. Although Tesla's stock has taken a beating this year, it's business as usual, and it's performing pretty well. Deliveries in the first quarter increased 68% year over year. An amazing 69% increase in production was the driving force behind this, which is a remarkable accomplishment given the supply constraints that the automobile industry faces globally. Furthermore, Tesla has been able to raise prices during this inflationary period in order to pass on increasing costs. Tesla is ideally situated to resist a future recession, according to experts. It had $18 billion in cash, cash equivalents, and short-term marketable securities at the end of the quarter. What makes Tesla a good investment now? The electric car company's PE has dropped far more quickly than its stock price due to its recent surge in earnings. Tesla's PE is currently sitting at under 100 and has decreased by nearly 55% so far this year. Despite the fact that the stock has increased by 15% over the past year, its PE has dropped by 85%. Although a PE of nearly 100 might seem to be too excessive at first glance, experts should understand that when they purchase shares today, they're investing in a business that is expanding quite quickly. Not only does Tesla anticipate a 50% increase in vehicle production this year, but management also anticipates average annualized growth of 50% for the foreseeable future. Additionally, the company's recent remarkable development amid a difficult period for automakers gives credibility to management's optimistic look. Also, there is an obviously high demand for the products, as evidenced by the fact that most new vehicle deliveries take 3 or more months. Yes, there are some hurdles for Tesla this year. It's possible that the company won't be able to increase deliveries sequentially, given that the automobile industry's supply chain problems are expected to continue into the next second quarter. Likewise, it's impossible to predict where the stock's short-term bottom will be. However, shares are currently priced at a low enough rate that there's a pretty good chance that in 5 years from now, investors will find the current price to be appealing, experts said. According to Tesla's current business pace, the company is probably still in its early stages, so savvy investors might want to take advantage of this. Here's a 36-year-old market expert, Kolja Barghun, as he discusses his reasoning as to why now is the best time to buy Tesla. He's going to reveal some of the reasons behind his high level of confidence in the EV giant this year. The entrepreneur founded the German YouTube channel Aktien mit Kopf, which translates roughly to investment with intellect. The 36-year-old has been creating videos about stocks and investing since 2013, and he's now got more than 300,000 subs, which has established him as one of Germany's most well-known stock market bloggers. This guy also owns a number of other businesses, notably online publications and YouTube channels that cover subjects like taxes, insurance, and real estate. Barghun starts making significant stock investments, and he's already been making an investment of 5,000 euros, that's $5,500, in Tesla each month since the beginning of 2022. According to Barghun, the company is exciting at the moment, and it's in a phase where it's making more and more profit. I also think Tesla's enterprise value will rise even further in the future. His objective is to purchase company shares for a total of $130,000. With a monthly saving plan, he intends to invest $5,500 each month for 2 years. His approach is based on the cost average effect, which occurs when investors constantly and consistently invest a set amount of volatile equities. You can avoid timing errors because more shares are automatically purchased when the prices are low. Savings plans may perform better as a result than one-time investments. Because of this, he chooses an investment plan which is involving a moderate sum on a regular basis, rather than a large sum all at once. But by using the cost average, well, it doesn't guarantee success. For instance, if a stock increases consistently over a lengthy period of time, fewer and fewer shares will be purchased. Barghun is also confident that Tesla will succeed in the long term, in large part due to its CEO Elon Musk. He added by expressing confidence that Tesla will more than double its annual car sales within a few years. Kolja thinks this is the reason why now is the greatest time to buy Tesla. The best EVs are the key to selecting Tesla and the best EV stocks. With the surge of new electric vehicles on the way, the auto industry is currently facing significant challenges and changes. Even EV giant Tesla has been vulnerable to the bear market. However, low share prices typically present an opportunity for knowledgeable investors. EV companies like Tesla and others are currently trading at low prices, which has got some investors wondering if now is a good time to invest, or if they should let it slip on by. Tesla's stock is already down near 40% from its peak, yet the automaker's first quarter sales increased by 87% year over year, thanks to strong demand. In spite of this though, Tesla's production only increased by 69%, reflecting the company's parallel price increases. The statement coincides with the opening of Tesla's gigafactories in Texas and Berlin, which should help production rise even higher. The business has nevertheless been able to raise its revenue at a faster rate than its output growth. This is encouraging for investors because Tesla's ability to set its prices scarcely has actually had an impact on the industry's increasing demand. But since the market is still in its infancy, there's still rising competition in the auto industry. Demand for EVs isn't limited to Tesla. Just like Tesla in its early years, Rivian and NIO both experienced losses in the first quarter. The former automaker reported a revenue loss of $1.45 billion in Q1. According to experts, NIO and Tesla may be immediately a good investment, while Rivian's manufacturing capabilities need more time to establish their worth. Both of these are obvious buys in the near term, at least in the fool's opinion, because there is no denying that Tesla has scaled production unlike any other EV firm now in existence, and that the production procedures are already receiving praise from investors. It's important to note that the majority of these automakers have business plans and objectives set for the following 5 to 10 years. Even Tesla required some time to turn a profit. If investors are ready to wait several years, the amount it's going to take for Tesla to grow EV manufacturing and finally turn a profit, purchasing Tesla stocks now, while they're affordable, might be a wise decision. There are top EV stocks to purchase or watch. After several significant damages last year, the listing of the majority of EV stocks is currently under further pressure. In general, both big manufacturers and small startups are placing speculative bets on electric vehicles, which is still considered to be a young industry. They've suffered from the present market's risk-off attitude and ongoing shortages of essential components. The following electric car stocks have the best balance of fundamental and technical signals. Li stock, eyes, buy point, new EV looms. The stock of Li Auto has an EPS rating of 76 and a comp rating of 95. Li Auto, one of the IBD 50 best growing stocks, topped a 37.55 purchase threshold on June 23rd, after a 6-week winning streak. Following a recent drop, Li's stock was able to retake important moving averages thanks to a 55% rally so far in June. Fears of delisting and supply disruptions, among other things, have also impacted China's EV stocks. Li Auto trades in America depository receipts, like the majority of stocks with Chinese foundation. The Li One SUV is for sale from the Chinese EV company. A tiny gasoline engine helps the Li One's electric range by extending it. The second model from Li Auto, the L9 SUV, finally debuted on June 21st, after a delay brought on by COVID shutdowns in China. Compared to April, Li Auto's EV sales increased by 176% in May. Li nearly tripled EV sales in 2021. Triple-digit revenue growth is still occurring, but steady earnings are still a long way off. Lithium ETF holds BYD Tesla. For the majority of 2021 and 2020, the global X, lithium, and battery technology ETF saw a big surge. After peaking in November, the ETF quickly decreased. LIT was recovering, and it's now recovered from its lows in April and is now back above the 10-week average. Out of a possible 99, it has a relative strength rating of 79. This indicates that during the past year, it's outperformed 79% of all the stocks in IBD's database. The lithium stock ETF's largest holdings include Albemarle, Tesla, and BYD of China. Along with battery manufacturers, the LIT fund also makes investments with lithium miners and refiners. Lithium-ion and lithium iron phosphate batteries are used in the majority of modern EVs. Experts think that these are the best EVs on the market, and it's a perfect time to buy Tesla. While you're here, go ahead and click on one of these 2 videos on your screen. See you there.